Okay, now for the next activity, I'm actually just going to share a few of my actual 20 stocks in my watch list for this month. Okay, of course, not stock tips. End of the day, you know, out of these 20 stocks, you will choose 5 of your favorite stocks. Okay, 5 of your favorite stocks. And then, okay, next month, we will deep dive into these 5 like what we have done this round. Okay, so hopefully, you know, every session you will have better understanding of 5 stocks and, you know, have some stock ideas. So of course, I use the top-down approach. I want to look at what are things what the investment theme first, THEME. Okay, then I go and drill down what are the stocks that will fit the theme. So, of course, now the stocks are not obviously cheap now. It's actually getting a bit more difficult to find. So I am now focusing on these 3. Steady dividend yield still can find, but not much. Growth business. So I believe there's still some businesses for growing. Steady dividend yield, I'm looking for things above 5%. Okay, I want the yield to be at least 5%. So of course I have this REITs fair yield. Hopefully you all know where to get this. Okay, let me show you all. Financial Mall. There's this thing called U. This is where I calculate my REITs fair yield. My REITs fair yield. So this is updated for this year. Then I just compare with the current yield. I go to REIT data and compare the current yield. Now, if the current yield is higher than fair yield, that means the stock is cheap. I still can find 2 REITs above 5%. Current yield higher than fair yield. Okay, these are the 2. 6.3 and 5.1. So of course I haven't do any in-depth studies about this company yet. I'm just forming my watch list. Okay, company wise, there's this company QAF that do Gardenia bread. Yeah, Gardenia bread, 5.1%. Okay, so this is the 3 stocks I have put my watch list because of steady dividend yield. Okay, now so growth business, I have identify a few areas of growth. One is the real estate. So if you have been following the real estate market, the real estate is actually still quite buoyant. So throughout the COVID-19 period, actually the real estate price didn't go down. They are actually still quite buoyant, and this year we actually do expect the prices to keep going up. So in fact, we may even be worried that there's more anti-speculation measures to control the prices. So generally speaking, the real estate market has been well. Okay, at the same time, of course, all the nations, they have been doing stimulus packages, a lot of liquidity flowing in real estate, a luxury product. I do think that this year still have a lot of rooms to grow. Especially we are looking at Singapore is going to attract, in fact, more Chinese going to come to Singapore. You have been reading the news. We have a lot of Chinese companies, large Chinese companies want to use Singapore as a HQ for their global business or overseas business, they call it. Okay, like for example, Alibaba, the Ant Finance is here. If you talk about SCA is here. If you talk about TikTok, it's actually here. ByteDance, thank you so much. They're actually all here. Thank you so much. So I do expect real estate and luxury goods to actually do well. Okay, thank you so much. Okay, so for real estate, I actually pick up a few companies. So Gokaland. Okay, how this attracted me is because one thing is actually the price to book is still very affordable, 0.44, very cheap. Okay, the other thing is Gokaland actually has one project now selling. Anybody can name the project? Hong Kong Land is actually one of the largest real estate company listed. And I don't know why the PB is forever so low. 0.32, I think that's quite obscenely low. And if you actually look at the property, it's actually very decent properties. Okay, so you are talking about, like, for example, Marina Bay Financial Center, One Raffles Quay. What is this? Okay, One Raffles Link Mall, under developed properties. Okay, Leiden Green, Margaret View. Okay, so you're talking about quite good end property. Of course, they not only have property in Singapore, they also have properties like all these places. Okay, Thailand, Vietnam, so on and so forth. Like for example, those in China one, like the Hong Kong one, they are actually very established properties. Okay, UIC, same thing. UIC actually owns a lot of very established building in Singapore. Okay, I can show you. Okay, so again, you can see some of the developer companies are finally having some action already. Valuation 0.5. As you can see, our main business was detergent. So it was actually related to detergent. Then of course they actually can see they even own like SJX Center, Clifford Center, Gateway. So these are some of the buildings they actually own. Now at 0.5, I'm not sure whether that kind of valuation is justified. Okay. Propnex is, as you all know, property agents. They go by transactions, commission to transactions. And I believe this year the transaction is actually going to remain healthy. So I do expect their commission to be actually good. So this company, I think it's worth paying attention to. Okay, the other thing that besides real estate, I think the other thing that this year is going to do well is the luxury products. So that's where I highlighted Hourglass and Cortina. Okay, manufacturing. So I actually have found a few manufacturing company. Again, same thing. In fact, not just last year, but their profit has been going up very nicely. Okay, the other thing is this negative net debt. Okay, negative. What does it mean? Sum of all short-term debt, notes payable, long-term debt, equity minus the total cash and equivalent and short-term investment. Okay, so basically your debt minus cash is negative. Okay, that means you have more cash than all the debt. Despite COVID, their profit actually went up. That's how I actually choose all these companies. And again, same thing. You can see here. Okay, negative net debt. That means they are very cash rich. So for example, for Fuyu and for Multicam, in fact, they actually have been giving consistent dividends. So the rest doesn't mean that it doesn't give dividend, but it's not consistent. So these two, Fuyu and Multicam, they actually give consistent dividend. So that's how this list of stocks. So the growth business I actually break down to three parts. Of course, real estate luxury. This is because I think the rich going to get richer. They're going to spend money here. Manufacturing. Okay, why I actually have this because because of increasing profit. So these are the companies whereby over the past few years, 3-4 years, their profit has been keep increasing. Okay, especially last year, despite COVID, the profit increasing and they have negative net debt. Okay, so if you ask me, manufacturing is not a very exciting industry, like just more of the increasing profit that caught my attention. Okay. And the other is healthcare. Of course, healthcare is always a growing business to me. And to find company with increasing profit and negative net debt, I only find these two companies, Singapore ONG and Tianjin ZX. So Singapore ONG is a gynae, okay, a medical group specialized for women. And Tianjin ZX, yes, no need to guess, Chinese company, Chinese pharmaceutical. But then, of course, they have very nice profit growth. Maybe I can just show you. Net income after tax. So the profit has been slowly climbing up. So this year, there's an impairment loss. But if not, you can see that profits have been slowly climbing up. So that's how I actually pick these two counter.